Welcome to the ICICI Prudential family. Congratulations on purchasing ICICI Pru LifeTime Classic, a plan which provides you with life cover and helps you grow your investments over the long term. This is an introductory guide video of your policy that will give you a clear understanding of the benefits which this plan offers and the things you need to do so that you can get these benefits. Let us first start off with the free look period. To ensure that you are comfortable with this product, we provide you with a 15-day period from the time you receive the policy document to understand the policy. If you have purchased this plan through distance marketing, you get a free look period of 30 days. If you find that there are aspects of the policy that you are not comfortable with, you can return the policy to us and you will be eligible for a refund. Let us now start with a guided tour of ICICI Pru LifeTime Classic. When applying for this policy, you would have made 3 important choices: the premium amount you will be paying, the number of years for which you will be paying premiums, that is, the premium payment term, and the number of years after which you will receive the maturity benefits of this policy, that is, the policy term. These 3 factors determine your policy benefits. So we request you to go through your policy kit to ensure that your policy reflects the choice you made when applying for it. This is a unit-linked plan, which means, along with the life cover, you can choose the funds in which your premiums will be invested. These funds cover a mix of debt, equity, and balanced funds. You can also switch from one fund to another and make 4 switches in a year free of cost. The plan also offers 4 other portfolio strategies, which can help you manage your fund as per your investment style. Do make sure that the portfolio strategy and funds listed in your policy kit are as per your choice when you applied for it. The benefit that you will get at the end of the policy term will depend on the returns earned by the funds you have been invested in, which are further dependent on various factors. Now, let us look at 2 factors which will be of use to you. Loyalty additions. Starting from the end of the 6th year onwards, we will add loyalty additions worth 0.1% of your fund value to your policy every year. This is our way of thanking customers for staying invested. Depending on your premium payment term, the percentage of additions added to your policy may be 0.15% and may increase up to 0.3% from the end of the 8th year. Wealth boosters. Depending on your premium payment term, we will add wealth boosters ranging from 1% to 2% to your fund value once every 5 years. For example, if yours is a policy with a term of 30 years, your premium paying term is 5 years. You will get 1% addition to your fund value in the 10th, 15th, 20th, 25th and the 30th year. Loyalty additions and wealth boosters go a long way towards increasing your fund value. Make sure that you pay your premiums and stay invested to receive these benefits. At the end of your policy term, you will receive your fund value as the maturity benefit, which will be tax-free, subject to conditions of Section 10(10)(d) of the Income Tax Act of 1961. Please note, tax laws are subject to amendments from time to time. You can choose to receive it either as a lump sum or as a regular payout spread over a period of time. Let us take a look at an example to illustrate the benefits of this plan. We will take the example of a healthy 35-year-old male paying an annual premium of ₹1 lakh for a 10-year period. At the end of 10 years, the maturity value, assuming a 4% investment return scenario, would work out to ₹10,61,696. And assuming that the fund delivers at an 8% return, this could be ₹13,23,168. Do note that 4% and 8% are returns used by the life insurance industry as per the IRDAI guidelines in all benefit illustrations. Like in all ULIPs, in this plan, your fund value will depend on the underlying fund performance. The returns are not guaranteed. Instead, they are based on the performance of the funds chosen by you. At this point, we would like to reiterate that equity investment should be held for the long term, and the longer you stay invested, the greater will be your potential benefits. An insurance plan is meant to protect you and your family from unforeseen events like death of the main income earner of the family. In this policy, if the person whose life is insured by this policy dies during the policy term, we will pay the insurance amount to the family members. So make sure that there's a nominee mentioned in your policy to whom the insurance amount will be paid. We will assist your family members through claim settlement process to help them get the due amount. One more point. In case of a sudden need of money, you can make partial withdrawals from your fund value. So to wrap up, here's a brief synopsis of your policy. You need to select the premium payment term, and the policy term. You can choose amongst the 4 portfolio strategies and different funds to invest in. Loyalty additions and wealth boosters will be added to your fund value if you pay premiums regularly and remain invested. At the end of the policy term, you will receive your fund value. You can choose to get your fund value either as a lump sum or as a regular payout spread over time. If the person whose life is covered in this policy dies anytime during the policy term, an insurance amount will be paid out to the nominee. You can make partial withdrawals from your fund value after 5 years. Pay all premiums and stay invested for the long term to make the most of your policy. We welcome you to the ICICI Prudential family and look forward to serving you for a long time. For any further queries about your policy, log on to www.ICICIPruLife.com.